Welcome to Herron Todd White's Economic and Property Market Update for May. The past few weeks have brought a range of economic and market developments for the Australian property sector to navigate, with interest rates, inflation, housing supply challenges, and global uncertainty continuing to shape conditions across the country. Earlier this month, the Reserve Bank increased the cash rate by 25 basis points to 4.35%, as it continues efforts to bring inflation back within its target range. While inflation has moderated from peak levels, cost pressures across housing, energy, insurance and construction remain elevated. Australia's economy continues to show resilience. Employment levels remain relatively strong, while population growth continues to place pressure on housing and infrastructure. At the same time, households and businesses continue to navigate higher borrowing costs, energy prices, and broader cost of living pressures, while construction costs continue to challenge housing delivery and development feasibility nationally. Against that backdrop, the federal government introduced some of the most significant proposed changes to property investment settings seen in years. From July 2027, negative gearing concessions for established residential property purchases are proposed to be removed, while the 50% capital gains tax discount would transition to a cost-based indexation model with a minimum 30% tax rate. The government's objective is to redirect investment toward new housing supply and improve housing affordability for first-home buyers. However, there are concerns around the potential impact on rental supply at a time when rental vacancies remain exceptionally tight. These pressures are arriving in a property market performing very differently depending on location and asset class. Perth, Brisbane and Adelaide continue to experience relatively strong conditions supported by population growth, infrastructure investment and ongoing housing undersupply. Meanwhile, Sydney and Melbourne are showing more moderate conditions, particularly in higher value segments where affordability constraints and borrowing costs are influencing buyer behaviour. The broader challenge remains housing supply. Australia continues to face a significant shortage of new housing delivery, with construction costs elevated, labour shortages, planning constraints, and financing pressures all limiting the pace of new supply. Against that backdrop, this month's report provides practical insights from our valuation and advisory teams across residential, commercial, and rural property markets nationally. Read the full Herron Todd White Property Market Report for May at htw.com.au.